Al Lewison.
Welcome to today's Wealth WOD.
This is like the 5th day in a row we've had the same clothes on.
It's crazy, isn't it?
Well,
How did that work out?
we're such animals.
Want to outline today, really short and sharp for you guys, the 6 key signs of a healthy market. This is really important, some of these factors to hinge in at. Some, they don't always line up initially. Sometimes a market can be moving when, say, 4 of these things are cranking. You don't have to have every single one, but these are some of the things to look out for. The key thing that I start to look out for is when titled stock starts to push out. So as developers, if we're 2 different developers and we've only got our developments around a certain area and we've gone through our acquisition, our planning, we've run our civil works, we've built our roads, we've got subtitles and all of our drainage is in, and we've got registered titled lots ready to sell, lots of them on the market, and we've both got lots on the market, that means the market's moving slowly. If we're selling...
Buyer's market.
That's the buyer's market. If we're selling all our stock way before it's registered, so we're selling it before we've finished off our works and we haven't been able to register the landers yet, that means the market's warming up. Yeah, means that there's pressure on it.
So is that a good thing for buyers?
It's good to understand, I suppose. It's good to understand when a market's going. So I wouldn't discourage me either side of it, but it gives me an indication on when a healthy market's there. If there's whole suburbs sitting there with thousands of lots sitting there registered, that's not a good sign.
Yep.
The media starts to report good news stories. Now remember, the media usually catches onto a market at least 12 months after the market starts to move. So the old market cycles, they go up, they come down, come down. The market, developers start buying here, the media starts basically reporting good news stories here, and then mum and dad investors start buying through this peak period. So if the media is starting to continually, because remember the media only report 2 types of story, bursting bubble or market's hot.
Well, I was going to say, the media is getting excited when the bubble, the B word, hits the press, because that is, we're excited when the media and the market's good.
Yeah. Underlying, obviously, any market movement is the economy. So 4 main capital cities sort of move a little bit differently. Sydney and Melbourne move historically together. Sydney slightly first. There basically comes down to economic drivers. So Sydney and Melbourne are business hubs in Australia. Sydney's a stronger business hub. So Sydney market usually moves and Melbourne follows it. Perth and Brizzy obviously hinge off their 2 biggest factors are mining and tourism. So if both of those industries are cranking, then the economy's good. If one's flat, then it can mean, depending on which one it is and how flat it is, can mean the market sits flat for a while.
Yep.
Developer and government buyer incentives start to dwindle or reduce. So if the market's hot, all of a sudden the government stops throwing incentives in and developers stop throwing incentives in.
So an example of that would be if you go back 10 years, there might still be some around a few years ago, but things like first home buyer incentives.
Yeah.
Incentives, they'll give people money to get them in the market, which drives the economy because the building industry is a massive industry.
Yeah.
Building industry is moving, then they're selling washing machines, they're selling benches and sinks, and there's people putting trees in, and the whole thing revolves around that activity coming out of the building sector.
Yeah, exactly. Rents are on the rise. Rents obviously mean that there's an increase in demand for property. If rents are going up, it means there's a shortage of property. So it's obviously a good one. And on the existing market, there's multiple offers basically prior to listing. So basically you've got your listing, you've immediately got multiple offers on a property. At the far end of the extreme is obviously auctions, when you see hundreds of people in the street with a lot of our capital cities at this point in time. So what do we got? Land titles dwindling and registrations getting pushed out. The media is really reporting the economy, developer and government incentives, rents on the rise, and multiple offers kicking the market off. So they're the 6 big ones that I look at.